How would you describe the closed-end fund market we've experienced in 2016, and what are your expectations with respect to 2017?
Well, this year has been very much a healing market, still healing from oversupply and tremendous retail selling that followed the Bernanke taper talk back in 2013. And then other issues that started in the year with credit fears and when energy collapsed. So the market's healed throughout the year. Discounts are still very attractive, yet closed-end fund investors, for the most part, have been rewarded by being in the market from 2016.
There were two distinct closed-end fund markets in 2016, one pre-election, one post-election. Pre-election, we saw discounts for most closed-end fund segments. Most closed-end funds narrow significantly. Some were actually trading at premiums that we hadn't experienced in quite a few years. After the election, with the yield curves steepening, long-term rates going up, we saw the municipal and taxable fixed income segments discounts widen out fairly significantly, and but the performance on, say, equity sectors performed very strongly.
In 2016, we saw a pretty volatile market in closed-end funds. It started off with a pretty big drop-off in the equity and bond market, and then there was a quick snapback up until about the third quarter of this year, and then we've seen a sell-off for the most part in bonds, although equities have held up pretty well this year.
And your expectations regarding next year?
I think next year is going to continue with the volatility. There's a lot of questions around the incoming administration's policies, spending, tax policy, and how that will impact certain areas of the market. So I think there's a lot of question marks going into next year.
One of my concerns when we start a new year is that discounts are not attractive and we're trading expensive, and that's not the case at this point at the end of 2016, where I foresee that we could have continued tightening. There's continued opportunities in the closed-end fund sector for 2017. So I think it's going to still be a good year for investors, despite having a decent year in 2016.